Okay, we are live. Good afternoon, everyone. Welcome to the Prospero.Ai stock market live stream. We have a bunch of good topics to go over today. A lot happening in the stock market world, the business world. Good to see everybody joining the stream. If you're watching on YouTube, please like and subscribe. We are on the path, the journey to 2,000 subscribers. If you're watching on Twitter, let us know. We love the new multi-stream we're able to do. If you guys didn't know, we're live on Twitter as well as YouTube for our loyal YouTube watchers. But without further ado, let me start taking you guys through some of the topics we're going to be discussing today. Before we turn it over to the model portfolio at the end. And as always, if you have any questions, stock market specific, Prospero, AI, anything and everything, feel free to comment them and we'll get to them. Hello, George. If you guys just saw George enter the cam, we'll turn to him in a moment. But without further
I'm here.
ado,
I think I'm going to make some tea.
Oh yeah, we're gonna get
But
into
I'm
some tea
listening.
today. We noticed we've gotten a lot of new viewers of the stream, so we're gonna go over again who Prospero is, what we stand for, our mission, how we're leveling the playing field for investing, all the tools available within our app. So you get a good overview if you're new and you haven't heard us talk about that before. Then we're going to be talking about the new TikTok update. The story has taken a turn today, and we'll talk about how that affects some of the other stocks in the market, maybe specifically Tesla, because it seems like China and USA tensions might be growing, and Tesla has a big Chinese EV part of their business. So we'll turn it to that. We'll update SMCI as the stock has not joined the S&P 500 yet, but it will be doing so on March 18th. Eli Lilly and Amazon announced a partnership, and we'll discuss how this affects both of their businesses and which ones it could be better for. We have Stripe passing $1 trillion in global total payment volume. They did this in 15 years, which is 8 years quicker than a very similar rival fintech company, PayPal. And we'll talk about maybe how Stripe is starting to become a real big competitor for some of the other fintechs, Square, PayPal, and the whole fintech space. And then we had earnings from Dollar Tree today, which did not come through too positively. The stock is down. They missed on both sales and profit for their holiday quarter, and they announced that they're going to be closing 1,000 up to 1,000 locations in the coming years, and they only have 17,000. So we'll talk about the retail space too, based off of these earnings. Comment from Joseph. Hello, Joseph. Nice to see you in the stream today. Joe Rogan read part of TikTok's terms and conditions. Scary stuff, what they're tracking. Yes, I do remember him reading that. Yeah, they. I don't know if what side you land on, if they want to ban it, if you want them to ban it or not. But it seems like, what I was reading today? It seems like Apple and Google are actually against the USA banning TikTok because they think the government will be able to have more restrictions on their businesses if they're able to pass this through. So I think there's a lot of complex things going on. USA China tensions, these giant companies like battle with the governments nowadays. Who has more power? I don't know. Um, but definitely going to be playing out over the coming year, and I'm sure probably even past this election. So we'll see how that plays out. At the end of today's stream, like I said before, we'll be taking you through the model portfolio. If you haven't seen that, George updates his stock positions, not ban, but regulate. Yeah, yeah. Um, and I guess it's especially concerning for USA citizens when a Chinese company has all the data.
My tea. I've been listening. You've done a great job. I'm about to come back. I'm looking for my phone. And
For everyone watching,
We'll
For
get this
everyone,
rolling.
I was about to say, for everyone watching, that's not the voice of God, that's the voice of George. But here he is,
Yeah,
back in
just a
camera.
little bit. I got a long afternoon of stuff. So I'm getting some tea for the home stretch. But yeah, starting with the market update, right?
Mm-hmm. Let's jump into it.
Okay. So let's take a look at let's get a live look at QQQ and SPY. I actually learned, I'm not sure if I announced this live, but I actually learned that I'm much more bearish. My portfolio is much more bearish than I thought. And so I'm doing things to remedy that. But at the same time, I would say that like things are definitely turning a little more bearish. So yeah, I would say that looking at SPY and QQQ, softening in QQQ net option sentiment. We hit like there was 36. If you look at the chart, we're definitely hitting some lower lows. So that might be a reason to like definitely at the end, I think, dump some of our tech positions. But I think we might dump like a lot more of our the issue is we need to acquire some new longs, some diversified longs, in addition to just reducing our tech exposure, because I don't want to become too skewed. So I think we might do that, drop some longs, adjust some shorts. There's a lot of different things that I think we want to do. But yeah, I definitely think the market, we're definitely seeing some softening in tech, and that's definitely making me nervous.
Yeah, I remember talking about, I think there was last stream or last Wednesday stream about how, and this is going to be a short coming out later this week on our socials, how you were recommending SEC and I forget the other one's name, ATI or some other hedge position for
Someone asked
people.
me about like a diversified defense. Like I basically said, um, I basically said that I said that would be fine. It's not necessarily an official recommendation of mine.
Got it. And so when you were saying you want to look for longs outside of tech, do you have a specific industry in mind right now, or are you just going to look at the signals later and
I'm going to
we're
look
going
at the
to look?
signals. I'm going to look at the sectors. Actually, what I'm doing in the background right now is updating the sectors, so I can take a look at that live with everybody. But yeah, like that's I'm going to look for some good sector targets for longs.
So we got a question from Ronald Wagner, and it leads us into a discussion we were going to have today anyway, so we might as well just jump into it. He's saying, does Tesla have more downside even though net options is at 88? And so, adding to his question, Tesla stock is down year to date over 31%, which kind of surprised me when I saw just how much it has actually fallen this year so far. We've been highlighting all the stuff going on with Elon Musk. He's been all over the place recently. So I don't know if we want to talk about how that may be dragging on the stock, but then also this TikTok news and how a ban passed in the House today. It leads me to believe that China tensions may grow between the USA and China, and Tesla has a big Chinese EV part of their business. So, do we want to kind of talk about all factors of Tesla stock here today?
Yeah, I mean, I think one of the things that we always say with our net option sentiment rating, which I think we might have some new people here. I just saw a bunch join. Our net option sentiment rating basically looks at in the short term, options expirations below 6 months, looking where calls above where the stock is trading at are priced versus puts below, things like difference in spread, momentum. I've actually been working on the underlying formulas for net option sentiment for over 10 years. Now, previously, I worked in AI as a service. So there's a lot of history and intelligence built into, that one single number. And what we always recommend for net option sentiment is we say you have to know you have to benchmark it to a stock of its own, right? And one thing that I know off the top of my head about Tesla is that it typically runs higher, right? If you look at it, like historically, like a lot of the Tesla runs, it's had net option sentiment fixed at 100. There's a really good graph that I could bring up later if people are still curious. Feel free to drop it in the comments. That does bring that up. So I think that that's a very important thing, benchmarking to history. Now, people don't always know the history. You can always feel free to come on these live streams, especially the more popular stocks. I can tell you about how the range performs. You have that historical graph. But even Tesla, you can see, I just pulled it up. It hit a nice, it hit 100, but it's definitely yesterday at open, it was at 97. Then midday 90, 94, today midday 91. Now it's sitting at 87. So I think that's a really good indication that it does have downside, right? A very important metric is trending to the downside. That means people are paying more for puts and less for calls than they were yesterday. It could be one or the other. It's probably both. So yeah, that's obviously really important. And that does say that there's more downside.
And
And I
so,
would add one more thing, Ronald. Like there's the absolute value of things, and then there's the direction. Both are very important. You can't just look at one and not the other.
so do you have any opinion on so we're seeing that there is more downside for Tesla. Do you have an opinion on where that downside will come from, or what actually will affect the stock? Like I was kind of leading into the Chinese topic with TikTok and EVs. Do you think that is enough to bring down Tesla stock more, or could it be another
Oh,
factor?
it's three. I would boil it down to three things. There's China worries, very legit. Then there's uh Elon Musk and the AI stuff. He's legit threatening to build AI outside of Tesla. And what I always said is AI, Tesla is a tech company and a car company, and that's why it gets valued. So if you threaten to take away the tech side, that's going to hurt the stock. That directly hurts the stock. And Musk is shooting himself in the foot. I don't know to what end, but it's not a smart thing to do when people are pricing AI into your business to threaten to not put your AI tech in there. That's about the worst thing a public company CEO can do. And then there's just, I would say Elon Musk's increasing hostility to anyone that disagrees with him, or anyone he was going after Mackenzie Scott, Jeff Bezos's ex-wife, last night. And it's just and he was going after her for diversity, equality, inclusion, I think that's what it stands for. But for donating to those causes is what he was going after, which is say what you want about those causes, virtue signaling, whatever. I think there's fair arguments to make that there's a lot of virtue signaling and not a lot of genuine help for people in the world. And that's a fair thing. But to say what he said about it and to go after I don't know. I think to go after people in general for charitable contributions, I think is a weird thing to do. Certainly there are nitpicks you can make for how people do their charitable contributions, but it's just a weird thing. I complain about a lot of things, believe me, but people giving money to charity, I don't really ever have a lot of complaints for, and I feel like it's a weird thing to have complaints about, no matter how you feel about him. But I would say no matter how you feel about him, I would say that you could like him a lot as a person and still also understand that as a public company CEO, your job is to appeal to as many people as you possibly can. And he seems to only right now want to appeal to the people that already like him. And I don't think that's a recipe for success as a public company CEO. You could think he's a great person, and I've said this in the past. As an inventor, there's stuff that I admire about him, and his critics on the other side say that he's never invented anything. But I kind of push back and say you invent things when you bring them to market, when they're in people's hands. I don't consider the inventor of some ideas are floating around in the ether. The person that actually matters is the person that gets them in people's hands. So I try to stay balanced on this, and in staying balanced, I frequently get criticisms from people that love Elon Musk and don't like Elon Musk. I get their ire all the time, but I try to stay as balanced as I can on everything. And I honestly think there's definitely things to like about Elon Musk, and there's definitely also things to say like, damn, as a public company CEO, there's real risk there, and that real risk is very much demonstrated in the price of the stock right now. And even his most ardent supporters, like, it's hard to argue with the stock performance not being problematic and not being somewhat related to the things he's saying.
Yeah, he's certainly a fireball within the business and really outside of even the business world now, almost globally. We got a question from Chris in the comments. He's asking, how often do you recommend rebalancing?
Um, I think that's really a function. If you have an hour, at least an hour, to commit to looking at stocks a day, I mean, maybe even half an hour, like, I don't know why you wouldn't rebalance or look at rebalancing on a daily basis, right? If you only have an hour a month or maybe a couple hours a month, then that's how often you should look at rebalancing. Like, it's a function, it's purely a function of time. And if you're spending time in the market, if you're spending time looking at it, I see no reason to not rebalance as often as you have an hour or so that you look at it. Whatever basis you have that, I think there's no reason why you shouldn't be spending, 5 minutes of that adjusting your positions to whatever you think is right. Now, you don't have to like overtrade, but like every day I'm adjusting the model portfolio like a little more long, a little more short, and there's absolutely no reason, whether you're using indexes, like we say, an index like SCC or SQQQ, whatever you're doing to balance long short, like, I would recommend doing that however often you have the time to update your market view in earnest, right? If you have 2 minutes, you shouldn't be rebalancing, right? That's not enough time to take an earnest update of your market view. But that could be like when I say if you have hours, like if you're reading news for a couple hours a day, there's no reason why you can't also rebalance like for 5 minutes of that if you're reading stock news. But it's really just a function of the amount of time you have.
And this is great to see because we are thinking on the same wavelength as our chat today because we just got a question about Square from Jim Klein. And let me just provide a little background of the topics we were going to cover today. And Jim, Square will be in this discussion. So Stripe released a statistic that they passed 1 trillion in total payment volume for last year after 15 years in business. And it took PayPal 23 years to do this. And I was going to use this topic to talk about fintech. So we'll get into Square, George and Jim and PayPal, and maybe if Stripe's success is eating into these public companies' businesses and the competition is growing.
Let the record show that you did say we were talking about this already, Stephen. This is why it's good to announce the topics. We can,
Yes.
nobody can claim that we said we had this idea already, when we didn't. So yeah, I mean, I actually just took a look, and my biggest I actually looked, and my biggest issue with Square before was that their profitability wasn't high enough relative to PayPal. But actually, their profitability is very close to PayPal, and Square's profitability plus growth is higher than PayPal. Their upside is 70, I believe it's 78, and their downside is 7, and then PayPal was like 70 and 29. So here we are. I'm officially saying that Square is the better investment than PayPal. I think that that's a pretty important change there because for a while, as I said, PayPal was just like more profitable, and I would say that it wasn't the case. But yet, you hear it here first. Officially, I like Square more than PayPal as an investment.
And so I, assuming by the way you're saying that, it hasn't always been that way. You thought PayPal was better for some time before
Yeah,
now.
I mean, for a while, like you'd have PayPal like close to, on our 100-point scale in terms of our projections for the business. We would have profitability was in the 60s in PayPal, and for Square, like even as of last quarter, it was in the 40s. But Square is now pretty close to 60. I can get a live look. I looked at it, but we can just look again. So yeah, Square is 58 profitability and 61 growth, and PayPal is 62 profitability and 54 growth, right? So we talk about profitability plus growth as a very important metric. And yeah, like profitability plus growth is now higher for Square. So no reason not to like Square better. Especially for a company that's all about cash flow, right? You want that profitability and growth.
Mm-hmm. And we got to trust the signals. And maybe, I think, if I'm not mistaken, Block has a bigger crypto and Bitcoin business than PayPal. And we got a question from Zeno asking about MSTR. The stock has been going crazy, obviously, Bitcoin, everything crypto related. He's asking, is it squeezing? If you look at their market cap to the amount of Bitcoin they hold, it doesn't really make sense. Bitcoin would have to reach 120K to equal it. So what do you think about MSTR right now?
Well, we're seeing, so here's the very important thing. Like, we are seeing very high upside, right? And 98 in Prospero and 8 downside, right? 46 profitability and growth, not that great. But you always have to look at all 10 of the signals. This is why we have 10 signals. Dark pool is at 91 and short pressure is at 81. That 91 dark pool could very much indicate to me that institutions are inflating the value of this stock, which if they are, if they're buying options, if they want to just like pump it up, like the Prospero signals aren't infallible. If they're pumping a stock, Prospero is going to like that, right? And we've been right, by the way, as it's gone up. We've had MSTR as our second highest upside stock for a while, right? But if you look at it, if you dig in, the average, like the 4 analysts that cover it on Wall Street, 3 of them have it as a buy weight rating and 1 of them have it as a strong buy, right? So like that's why our upside rating is made up of live options bets, analyst ratings, price targets, and then price momentum factors. MSTR looks good in all of those things. Do I think it could crash pretty hard? Like, especially due to that, like, dark pool rating being like an indication of like, potentially a lot of manipulation of a stock price or, a desire to present a stock price as different than it is, I think is the better way to say that. Like, yeah, that's absolutely a concern of mine. And one of the reasons why I'm a little that like 46 profitability and 37 growth is a little low for any stock. But at the same time, like you could say that before, and we've been totally right about ranking MSTR as high as we have.
Yeah, and another stock that's been ranking high in the signals for a while now is SMCI. And I could tell that when we post shorts about this and talk about it, people doubt that it's going to be able to maintain, the rally that it's had. But I wanted to bring it up because it is being added to S&P 500, like we've said before, March 18th, and the stock just continues to stay high, go higher. It's the little train engine that could SMCI.
Yeah, I mean, we've been talking about that for a year, and we've been saying that we still like it for over a year, and we've been very right about SMCI. That's another thing that we've nailed, right? So I think, one of the big things that we just crossed 1,000, we crossed 1,000 viewers for the first time ever, Stephen. Thank you for everybody that's tuning in.
Thanks to all the viewers. Thanks for coming. We love that you guys enjoy the stream, and glad to see it growing.
Yeah. And yeah, if you wouldn't mind, especially on our YouTube page, if you wouldn't mind grabbing it, you'll get notifications when we send it out too, giving us a like on it's Prospero_AI on YouTube. We have a viewer that actually normally like tries to whip everybody else into shape. Wolf Stigma. But yeah, I think, back to SMCI, I think it's very important that we kind of look at those fundamentals. And I think someone asked like, I forgot what the exact phrasing was, but basically like, is SMCI getting pumped? Is it over? And we're like, hell no, it's about to get added to the, like, our signals still like it. It's about to get added to the S&P 500. We don't know why people are claiming there's a ceiling. And I think I specifically said, who is claiming that? Right. And I think that's one of the things that our signals really help with. We had we had a I think it 75 upside breakout 2 weeks ago, and it jumped up to above 90 on upside. And that's when we definitely said, like, no, people are increasing their long-term bets, and they're actually maybe even shifting their short-term options bets. We saw net option sentiment go a little lower and upside go higher. So it's like, yeah, we've seen evidence that people are actually shifting shorter term bets on SMCI to longer ones. And that's just people saying, like, hey, we say come hell or high water, we think this stock has a lot more to climb. And one of the things that we always say for those that are newer to watching, SMCI PE, when we look at it on the 2026, it's still only a 1.16 PE for 2026 earnings. Compare that to Nvidia, which is 34.44 or 38.65 2026. I guess they added a 2027. I just want to make sure it's apples to apples. Yeah. So yeah, basically SMCI is trading at about a 37x discount, or maybe like 36 or 35x discount to Nvidia on 2026 earnings. So it's pretty easy to see why we love it, why our signals love it, and why institutions continue to bet on it long term.
And since we
I'm
have
getting my tea that I made, Steven. I'll be right. I'll be right listening.
no problem. Since we have all of these new viewers in here today, glad to see everybody joining the stream. Maybe we could talk a little bit about, for everybody who's just popping in new, what the Prospero mission is, why Prospero is unique, all of the tools we offer within our app that separate us from other companies, and how we're trying to level the playing field for retail investors and make their investing journeys more prosperous. Kind of give a whole holistic view of who we are at Prospero and what we do.
Yeah, perfect timing. I got my tea, jasmine green tea. For anyone that want a tea recommendation, the Harney and Sons jasmine green tea is just the best. It's like a delightful flowery treat. I am not getting paid for this Harney and Sons advertisement, for the record. This is purely, I am just an enjoyable customer. So, what makes Prospero unique? I would say that it starts out with, like, I am like a lot of retail investors, even as someone that was trained at the buy side. I worked at my first hedge fund when I was 17. I actually taught myself accounting to get that job. And for the last 13 years, I worked to create a free product. I worked to solve the problems that I saw. Like when I was 25 years old, I left the buy side because I saw some dark stuff. I saw some stuff that I didn't like. I saw that even as a value investor that had the best training, I started my training under Bruce Greenwald. I'm at Columbia Business School when I was 16, who's one of the most famous value investors, certainly the most famous academic value investor. He's at the Value Investing Center at Columbia Business School. So I've been trained by some of the best. And even that was something that, like, I just was like, no, there are underlying market equations that we're not seeing and we don't have access to. And that's actually what got me interested in AI and starting my first AI company 13 years ago. And one of the things that I really wanted to accomplish was finding those underlying equations, and I wanted to make them free. Like this background that you see in back of me, this is now my penthouse apartment in New York. And one of the things that I like to say about this is, when I worked on Wall Street when I was younger, I made good money. But these live streams doing so well, this background, everything, it's all paid for by a product that's scaled, a product that is free. And we're really proud of that. Our app is free. It will always be free. And I think that that's something that's like a really big differentiator from us. So the question is why, right? Why do we have a free app? And that's a fair question, right? And I think one of the things like that I mentioned is I'm like you guys. I was in AMC. I was as frustrated as anyone when Robinhood turned off the buy button. I didn't like Robinhood before that. just for the record. I haven't liked them forever. I didn't like payment for order flow, right? That's why the one thing that's like very important, what are we different? Prospero has pledges. We will never front run trades. So no payment for order flow, none of that bullshit. We will never sell raw data. So one day we might sell predictions built on raw data, protecting the privacy, but we will mark up those predictions and basically make sure that we are bringing them back to people in the app, the experience. Our users are our partners, not our product, unlike everything else that out there, even a place like Google. Google users are the product, right? So what are we trying to do? We're trying to long-term flip the script and give retail investors an advantage over institutions. So the story on that and what I saw is like institutions will pull like real-time credit card swipes, camera data, satellite images, locations on everyone, web traffic, you name it, they know exactly what you're doing. They're getting that without your consent, right? What we want to do is someday ask people questions like, what's your temperature? And be able to model a pandemic in real time and essentially do what the US senators did, where they were reassuring the public, shorting the market, making private information arbitrage profitable for them. We actually want to make that information a public utility. Ask you questions like that, deliver the benefit back to you, and then have an incentive to give us more data and create more value and create a virtuous cycle. It could be something as complicated as that, to us also asking something like, what are you going to buy, an Apple or a Samsung phone next? Or are you going to buy an Apple or a VR headset or a Meta one? And that will allow us to be more and more accurate in terms of the predictions, deliver that benefit to you. So all of that is a story about everything that makes us different, right? Why are we interesting today? Because one of the things that was important to me, one of the things I did work 13 years to create a free product for you guys on, didn't draw a salary. This apartment is actually the first salary that I've gotten. It's a nice view, as you guys can see. It's a nice monument to the hard work that my team and I have put in. But why was it done that way? Because I wanted to create something of real value. And the way to understand how we're different than everybody else is I have seen every other AI company just as swindlers at best, if not like, outright swindling people. Maybe they just actually at best, they don't know enough about the market to know how dumb it is that they're suggesting they can beat Wall Street in a non-linear equation competition. When I was 27, led a team that invented evolving neural networks, joint invention patents with NYU. We built some serious technology. I took a huge, bet on building technology. So I can tell you the hard way how hard it is to compete with hedge funds and nonlinear equation competitions. I've been at this much longer than a lot of people. I was doing it when the technology was more nascent and it was an easier environment to compete in. You can't do it. And it's a joke that some of these AI companies are claiming that they can beat the market, like beat Wall Street in a nonlinear equation competition, when they just can't, right? None of those, like some of these places, maybe a few of them, have raised $100 million, couple $100 million. Wall Street place like Rentec, Bridgewater, they could lose that in a day and they wouldn't bat an eye. So how are these places going to compete? So what do? We do the opposite of that. About 6 or 7 years ago, I started saying, well, instead of trying to win nonlinear equation competitions, I'm going to take our very powerful platform and I'm going to turn it on a new problem. I'm going to say I want to track and visualize where institutions are making their bets, especially in the options markets. And that's why Prospero works so well. We are not trying to beat institutions. We are trying and have very good tech that exists for way longer than a lot of these other new players, just the tech alone, at visualizing and understanding where institutions are making their options bets. And to tie it up in a nice little bow, I don't know how many people pay for like dark pool prints, option sweep orders, block trades. We actually are the opposite of an option sweep order, the way we've built our tech. So an option sweep order basically says, we are buying the ask all the way up. There's an institution that's basically saying, we'll actually pay a bunch of money to keep buying the ask, pay that premium to keep buying the ask, to send you a message, right? That's the only reason. Because why else would they buy one strike expiration combination when there's tons of strike expiration choices and they can spread it out? Why? Because they want to send you a message. They want to make you the tool because they know when you see those prints, you're going to buy them. So when you pay for option sweep orders, you are basically paying to be a hedge fund operative without your knowledge. What we do is the opposite. We are basically looking at what they don't want you to know, something that we call institutional trade signatures, robotic signatures. If an institution wants to spread money around, they're not going to send out a sweep order. They're going to spread it out on a lot of different, in an automated way, a lot of different contracts, a lot of different a lot of different strikes, a lot of different expirations. It could even be over the course of a few days that they deploy that capital, so people don't really know what they're doing. That's what metrics like net option sentiment tracks, or in the long-term options markets, upside or downside. We are actually spent a long time not only building tech that can track and visualize these things well, we've built a process out of using that information and teaching people how to use that information. And that's why we're really proud that our performance is close to 300% over the S&P 500 this year, evolving that process. We actually have evidence that institutions have started to follow our trades, which is great. It shows how far along in our process we are, or follow our recommendations. And, of course, if someone is claiming performance like, that high, like over just for 2024, that's not a big deal. But we have the 2 years prior beaten the market by, about 50% each year in tough markets, in bear markets. So this not only is an old technology platform, a lot older than all the other people claiming that they can do similar things that really can't. This is tested and built in a way that we can convey the meaning in as easy terms as we convey it to you in these live streams.
Well said, George. And I've said this. Okay, yeah, no problem. I said this before to the people that watch our streams. The longer you are involved with Prospero, the more you watch these streams, the longer you're in the app, even if you're not directly using the data or the signals that you see, the more you become familiar with it, the more you'll trust it and you'll see how good it actually is. So I hope you guys stick around and join us for the journey to make your investing more prosperous. Chris loved your recap of Prospero, George. He said that was a really good pitch.
Oh, thank you. Well, I appreciate your appreciation, Chris. So yeah, I think the one thing that I would add is, like, unlike a lot of these companies, I promise something very specific. To Steven's point, I promise you, if you stick with the signals, if you integrate with them, if you use them, just take a look before you make any trade, like, you will find that you do better over time. That is our promise. We don't promise anyone that they can beat the market, because that's silly, right? I don't know, like, I can't teach someone how to, like, trade well, how to watch the market. Like, we could give people good recommendations that they don't just execute on. So I'm not going to promise that, but I am going to promise that if you learn the Prospero signals, if you use the app, you will do better. And if that isn't your experience, come to me, and I imagine I can help you make sure that's your experience. Anyone can always email me, Prospero.Ai. I meet with a lot of new users one-on-one.
And it's stocks like the one we're about to talk about next that have been so good within Prospero, Eli Lilly. They just made an announcement today how they're partnering with Amazon to use Amazon's pharmaceutical delivery service to deliver their weight loss drug to customers, because they said they've been having trouble fulfilling all the demand because it's been so popular. So I wanted to bring up the story, and I wanted to ask, which company do you think it will be more beneficial for? Is it one more one-sided, or is it just mutual for the both of them?
I mean, I think any company that, like, especially if you consider, like, how like, big this weight loss thing is, like, any company that gets Amazon's distribution, that's a better thing for them than for Amazon. But it's one of those things that goes both ways. Like, one of the things that Walmart was actually famous for for a long time was the way they related to suppliers and just use their weight to get great pricing, right? So I'm sure Amazon is getting a good part, even though they're not getting as good of a part of a deal as Eli Lilly. Like I'm sure they're getting a very nice deal with Eli Lilly that's going to ensure that this is that they get their, what is it? I don't know how many pounds of flesh. 5 pounds of flesh, I think. Pounds of flesh in the deal. I don't know if that's the best expression, but yeah, like one of the things we always say about Eli Lilly, and like we say this about any company that we like, is like when things look good in the signals, like it tends to be circular, right? But anytime I dig in to these like high upside stocks in Prospero, I almost always find that there's good management running good R&D programs, efficient companies, like, and when I dug into Eli Lilly, that's what I found. So I think you kind of get the dual purpose when you look at Prospero signals, right? I think they can make it easier for you a lot of the times, but often when I do the deep value dive, I often really do also find out that the Prospero signals are not just vaporware. Like they are doing a lot of heavy lifting in terms of like figuring out what good companies are. And it's very easy to do because they're figuring out what good companies are, because institutions are betting on them in the options markets, right? That's a good way to ensure, like, hey, I don't have time to do a bunch of research on every company. So having Prospero do a lot of the heavy lifting for me by amalgamating those opinions, that's really useful.
And something I'll mention just before our next topic, which surprised me today when I was reading the story, is that Eli Lilly is now the 10th biggest company on the stock market, USA based. So they've grown, and it's crazy how like they'd be under the radar, at least for me, if we hadn't talked about them so much, and how a company could get that big. Um, but spinning into our next topic, before we switch over to the model portfolio, maybe this topic will kind of, hopefully, it doesn't change your thinking or whatnot, but. Dollar Tree reported their earnings for their holiday quarter, and they missed both sales and profit, and the stock declined pretty good today. I believe it was down 14% last time I looked at it. They also announced they're closing 1,000 of their almost 17,000 locations. We've been highlighting the retail story for a while now. One question I definitely wanted to pose to you, after a lot of these holiday quarter retail earnings have come in, and a lot of them were pretty bad, is now when the next quarter of earnings is reported and there's no holiday boost, um, are we in for like a double whammy of negative?
Yeah, I mean, it's one of those things. I think we talked about how Unusual Whales printed that they were that there was an 85% chance of recession. Um, so yeah, I think that that's a pretty important part of this, right? That it's just like, well, a recession is likely to mean, like, not always, but highly likely to mean a decline in spending. So, the decline in spending is going to be seen first, and especially like very dependent on consumer goods companies. And we all often talk about ads being next. But yeah, we've been calling this for a while. That's why we recommend SCC, as just like, yeah, I think a lot of the downside scenarios that we're going to see are going to hit consumer spending. So if you're worried about your portfolio, like we're definitely seeing more markers of this happening. You brought up, like last week, you brought up like the fact that FICO scores for the first time in 10 years had moved down. And these are markers that are like warnings about consumer spending, and we're not the only ones are coming to fruition. So if you're worried about the market, you don't have to hedge everything. I think you can probably just put a nice chunk. If you even put, like, I'd say 10% of your portfolio in SEC, that might be a lot, but that's if you're very worried. If you're only a little worried, 5% should really eat into, if you also pick good longs and diversify, it should really help you weather the storm if there is one.
And we'll continue to update our viewers throughout the process and see how these things play out. 85% of a recession seems very high to me, so we'll update everybody on that as the year goes on. Hopefully, it doesn't come true, or at least doesn't affect our viewers. Um, without further ado, are we ready to switch over to the model portfolio, or do we want to
Yeah, no,
cover
we got
anything
to do
else?
it.
Let's do it.
All right,
All
I'll
right,
be
so
back
George
on
is,
the other computer.
yep, George is, for people watching, George is going to switch his setups right now. He'll be back in one moment on our second cam, and we'll be going through the stock market, how the specific stocks are looking today, and how we're going to update the portfolio. If you guys have any questions for George as he's doing it, feel free to comment them. I will let him know. I'll read the comments out to him. But until then, hope you guys are enjoying the stream today. Sorry to ask again, but please like and subscribe. Um, the viewer totals are great. I'm happy that the Twitter live streams are starting to really take off. We got to get YouTube to catch up to Twitter now. It's kind of reversing. Used to be YouTube leading the charge, but Twitter is taking the gold prize now. 1,600. Wow, that's crazy. We have George joining in. Here
I
he
got the
is.
computer switch down to a science.
Oh yeah, that was smooth. That was
Yeah,
like
I had it all
the
set up here.
the NASCAR people who change the tires. We're almost as quick as them.
Yeah. Oh, the portfolios are actually doing pretty well, so I might not do too much, but I do have a new technical setup that I'm really proud of. Shout out to Jim, who writes one of our letters. Those are those that subscribe to the trading letter. Would see that. But let's get into it. As usual, I'm getting everything set up here with the letters. It looks like we're gonna have to do this in 13 minutes, which isn't so bad. But I'm actually trying to figure out. Sorry, I'm viewing. Oh, I'm an idiot. I was looking in the model portfolio and getting confused. Yeah, pretty dumb, George. All right, here we go. Now it's a little annoying with the way, we'll see. Are we gonna hit? Do you think we're gonna hit 2,000 viewers for the first time, Steven?
If I had to put a bet on it right now, I'd say yes, we do.
Let's see.
Keep watching, people. Keep sharing the live stream.
All right. So first things first, let's look at the long tracker. W-Day here is our new. As I said, my new thing. I can actually, Steven, look. I can actually track what's in the portfolio on this. I loaded it in. Isn't that cool?
Yeah, constantly upgrading here at Prospero. The process.
And learning. It's funny. I've spent a good portion of my life insulting technical analysis. Ooh, brutal. I don't like what I'm seeing here, but I might have to. Oh yeah, we're gonna open up some other longs. Okay, that's what I remember we're gonna do. Okay, so we're not gonna do these pictures today. I don't think we have the time. Are we gonna do sectors? Why not do sectors, right? We're going to be a little lazy and just post the sectors as they are right now, but only a little lazy. All right. Doing the sectors. Okay, so we are going to get rid of. Let's look at the. I want to look at W. Yeah, no, 202. We just don't like it. We're going to pick up other things maybe, but we're getting out. Nothing but trouble in W-Day. 3 SMCIs, that's fine. We're loading up on it. Anything else? I do want to get out of, I think I want to get out of KXAN. I've just been in it for a long time. It was like a play that kind of like blew up on us. Why can't I see it? Yeah, down 7%. what is it trading at? 19. I'm done with the KXIN experiment. It was a failed experiment. I should have never done it. I think we're good on anything else. APD, fine. EXP. Oh, I didn't realize it flipped. We want to diversify with that. So we're going to do, all right, let's see anything else. All right. Okay, now we have our short, Steven. First, we're going to look at percent change. Oh, yeah, look at those shorts. X is finally down. Oh, yeah. We've been holding that X for a long time, waiting for it. I think we're going to hold for one more day on that X. All right. I think that's fine. XBit. Let's see. Maybe it's time to get rid of XBit. How about on the 5? No. Yeah, I think we're going to get rid of it. We have so many shorts. We're going to get rid of it. NSA. I forgot the alphabet briefly, I guess. Why is it always making it so small? We have to like keep zooming in. 5 minutes, 30 minutes, 4 hours. NSA is losing some momentum. We're going to stick in it. NVRO, OGE. I think we would just want to cut one of our OGEs regardless. We're reducing exposure. We're not even going to look. And then do this again. Let's look at the 1 hour. 15. Can you tell me if we're winning or losing on NVRO?
We are winning right now.
All right. I think we're gonna take our win. We're gonna take our win. Sometimes you just gotta take the win. FYBR, what's going on with that? Are we winning or losing on FYBR? It doesn't matter. We're doing really well with that.
FYBR is a win right now.
I think we're gonna hold it. How about FWRD? There are 2. Wins or losses?
Win and win.
All right, we're gonna drop 1. How about CNDT? Where are we on CNDT?
It's another win.
going on with Cracker Barrel? One of our favorite stocks to hate on. We're sorry, Cracker Barrel. Oh. I think I'm actually going to pick up an extra Cracker Barrel here.
The hate continues.
We just do not like Cracker Barrel around here. Oh, I'm so happy we held on for X. We've been waiting for that to go down for so long. All right. That's all we want to do. How are those metas? Are we wins or losses?
Loss.
There's 3. All 3 of them are losses?
2 of them are a loss. 1 of them is a win.
Anything else on the tech side? Are we keeping those SMCIs? Yeah, we're keeping those SMCIs. How about the Microsofts?
We got a win, a win,
Well, there's only 2.
and that's it. Yep.
Okay. All right. All right. We're not even going to do this today. We're just going to do quick and dirty. What are our target sectors? What's actually doing well? Materials, energy. We want materials, energy, utilities, financial longs. So, very quick. We're actually just going to do a quick formula. Oh, that's the closing bell. It's like, what the hell is that? All right. What's AMR doing today?
AMR was down 2%.
what's going on with MPC? Oh yeah. Give us some MPC. Wait, what is this? It's 1 hour. How about 15 minutes? Only one. About 4 hours. All right. MPC. All right, we're gonna do MPC. How about VLO? Valero. Are you doing better on the 15, Valero? No, God. Energy's getting hammered a little bit. How about PSX? Are you doing any better? Yeah, you're doing better. All right. Oh, I think McDonald's was doing bad. Actually, we'll give McDonald's one more day. You know what's going on with McDonald's?
I did not. How their stock moved today, or just in general?
Yeah, like any understanding why it moved the way it did?
Senior VP Catherine Hoovel announces retirement.
Catherine Oogle.
Company says lower income consumers are pulling back.
Ah, there we go. We're getting out of that for sure. Let's increase our financials exposure. All right, we want one more. Oh, let's grab a square, right? I don't think we're in square. I just want to get in square. Okay, now I want to get out of here. Utilities. NEE. Damn it, we fucked that up. Oh, what's CEG? Hello, new utilities company. Constellation. I like some CEG. All right, we're done. Can you tell me what's going on with QQQ and SPY and option sentiment?
Yes, sir. QQQ is at 41, and the SPY is at 50.
Okay. All right. It's today the 12th, the 13th. I like what we did here, Stephen.
Yeah, this is big diversification out of tech. Something definitely new for the people that are watching.
Yep, we don't do this. This is not an everyday thing.
Hmm.
You can tune in anytime, you know, and you might get a completely different idea. All right. Any other questions? We didn't hit 2000. 1758, not a bad day.
No, not bad at all. We did not hit 2000. I don't see any questions, but I do want to mention, just because it's pretty new, we do post these streams on Spotify. So if you ever can't catch them live, the link is in our description. You could follow us on there and you could watch us on there later. But yeah, besides that, I don't see anything else.
Should we check one thing? If you are watching on X, like we do check to see if you post in any comments. We'll check and look for we'll look right now and see if we have any questions there. Do you see anything there, Steven? I actually don't have it loaded on this computer.
I just see people saying no questions, just a lot of hype in the comments.
We appreciate the hype. All right. I think that is all. Thanks, everyone. We'll see you Monday.
Yep, we'll be back normal time. Thanks for joining us. Have a good week, everyone.
All right.
Bye, George.